Hey, greetings. Dr. Jeffrey Scott here, and this is my Market MRI Pro update for 11/26/2025. Sitting here in South Florida, and in the midst of an unusual late November thunderstorm, so hopefully power will stay with us. First, happy Thanksgiving to everybody. Hope you have a great 4-day weekend. If you have time, join me Friday. I'll talk about that in a little bit. Drive safe and let it be a healthy one as well as a happy one. So, in the spirit of the holiday, my title today is Holiday Cheer Brings Hope of Rate Cuts and All-Time Highs. You know, the markets of late have been sort of, if the Fed speaker comes out and says supports a rate cut, I think it's December 10th, the market trades up. And if the Fed speaker comes out and says um, don't support a cut, the market trades down. So the good news is the last speaker said supports a rate cut, therefore the markets are higher, and we don't have any more Fed heads speaking until I believe the day of the cut because we're going into the quiet period. And so the big earnings are done, the rate cuts are done, Nvidia's earnings are done. We might have a data-free zone that will allow the market to melt up. Certainly, I think that's an opportunity that we might see. So holiday cheer brings hope of rate cuts and all-time highs. Again, November 26, 2025, Jeffrey Scott, marketmripro@gmail.com, my Google group, Top Down Trader, my website, marketmripro.com. As always, this should be taken as education only. I am not here to give investment advice, but rather I'm here to show you how to use the tools that I've developed for top-down analysis, how I apply them. Trading involves risk. You and your owner are solely responsible for any investment decision you make. I may own or intend to buy or sell any stock mentioned in this report. Trading stocks and options should be considered risky. You should always consult with your financial advisors before trading. And I have tools in multiple platforms. And as mentioned the last couple of days, the Metastock platform tool has launched. My Google group is where I communicate today. I did show a snapshot out about how it looked like the markets were going to break trend resistance. And if that happens and they close above that, we'll take a look at where we're at in a few minutes. That would be something that would be exciting and suggest that maybe those all-time highs are there. Those that watch the weekend video know I always have a high, middle, and low road scenario. I thought the high road scenario would be in play and that we'd run higher to the end of the year, especially if we get that rate cut. Right now, that's the path we're following. Just go to Google Groups, go to all groups, then look for Top Down Trader. Let us know how you want to be contacted. You're in, it's easy to quit. Just a word that I said the other day, new members are on moderated from a posting perspective. For some reason, one person keeps joining with different names, and either each of those different people have a virus that causes the same post about vent cleaning, or one person has a problem and keeps signing up to spam people, which I don't understand. So I moderate all new ones, and if you send spam, you're welcome to stay. I just will not let your spam through, and it's just the way it has to be because this is not about bothering people. Leaders continue to rally off the 50-day SMA. You see a field of green. These were leaders back at the October meeting over a month ago, and held at the 50 essentially, and are now rallying. And I look for them to run towards new highs as well. If they fall over, that would be a sign that the market was going to correct as well. As we all know, Thanksgiving is Thursday. We got a PMI on Friday. Probably doesn't make a big difference. Right now, the after-hour sessions are quiet. I think Corsair was up a bit because somebody bought shares. And then Friday, it looks like a Chinese company has earnings on Friday morning. We're in a part of the year now where, as the news flow drops and the holiday cheer rises, we hope to see new highs. Judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. And by the way, that is just my hypothesis about new highs. You got to trade the markets we get, not the one that Jeffrey thinks we're likely to get. And I am always nimble with my own money. And I still have too much in cash if we're rallying up to new highs, but I don't deploy it all in one day. I did buy some things today. I bought um, positions in JMIA, and I've talked about SRRK a couple of times as a biotech that I'm excited by, but mostly not for short term, but it's long term prospects. So I bought some more of that to add to an existing position. And I think that's all I got filled in today. Yeah, I think that's what I ended up with. And then I moved around some of my other existing positions. As I mentioned, the Metastock MRI Pro is launched, and I think it's Wednesday at 12 o'clock, and I'm sure Metastock will start sending out invites. I'll be doing a educational program, introduction to what I do, and I'll talk about why Metastock and my tools are a great combination. Some of those things are listed here. One of the things I'm going to talk about is, there are two. I look at all the influences I've had, and my main influence is Ian Woodward, who was a Can Slim builder, and that he took the story of Can Slim and he added to it. But I look at what I do, and some of the biggest influences of how I trade day to day, in addition to what I learned from Ian, Can Slim, and others, have been John Person and Sagar. And in Metastock, we'll be able to combine my stuff with Sagar stuff. And that's one of the things that gets me really excited about having my tool set there. Live Black Friday event, I'll put the link in the remarks section. It'll also be on the Top Down Trader, 10 a.m. Eastern Friday, probably run 2 hours. It'll be a market review live. I'll announce the newest addition to the Market MRI Pro platform. Um, we're going to be rebranding and renaming it, so this is not the official launch of that product, but rather an opportunity for current Market MRI holders that want to um, be the initial owners of the new product to get a special pricing. I'll also have Black Friday pricing on my existing app and my TradeStation tools. And so we'll have some fun. Hope you can join us. Any information you need about what I talk about or register for a meeting that you don't find a link for, just email me at marketmripro@gmail.com. I always answer my own emails for Market MRI Pro customers who need some support. Coding at marketmripro.com will get you Praveen. We loaded a bunch of videos up today on the website for support, and I'm going to redo the ones on layouts because I had some glitches when I did it. And consider joining the Google group. That's just a great way for me to let you know what I'm doing, what I'm thinking. And we'll definitely have a meeting in Florida in 2026. Thanks to those of you that already reached out. I'll tell you, it's a tough thing to get people into a room anymore. People like virtual meetings. I like virtual meetings too, but you really can't beat being face to face, because what you don't get virtually is what happens before the meeting, the networking opportunity with folks that are attending, the opportunity for me to meet with you during breaks. We go to dinner together, um, and I think it's much better experience than you get from network program or internet program. But I know that not everybody can come live. But we actually surprisingly had a big turnout compared to what I thought, so it keeps me going. And the June meeting in Orange County, still I haven't gotten any feedback from yet from the organizers. All right, here's the market on Wednesday, I guess it was. Bitcoin was up for a change, and actually Bitcoin is now a little bit positive over the last 5 days. That's good because Bitcoin has certainly been a laggard in the U.S. markets. So to see Bitcoin up is good, because there's a lot of other companies, whether they're miners, and there's all kinds of different companies like that MicroStrategy has spun off, that are based upon Bitcoin with various strategies applied to it. Russell up 0.89, Q's 0.88, Spider 0.69, Diamonds 0.67. Unlike yesterday, they came off their highs but finished in the upper part above 50-50 of their range. Dollar is down there 28%, 28%, 28 cents. God, could you imagine that? And the volatility was down just a bit. Breadth certainly improved with the new highs minus new lows of the NYSE almost at 100 and over 100 on the NASDAQ. My favorite saying is new high market new highs are built upon new highs in stocks, not new lows. So that's encouraging. Another thing that I look at here is the participation. 63% of the 1500 were up, 66 60% rather in the NASDAQ and 68% of the NYSE. So a strong day in the market. Interesting positive day on the indexes, more stocks up than down, but it took off some of the heat when you look at the buckets. But I am going to show you a short-term concern that says that perhaps the large caps in the S&P 500 and maybe even the S&P 1500 needs to take a pause to refresh, but that's to come. If we look at the S&P 500 sectors, you can see we are led by utilities, materials, tech, staples, financials. Um, an interesting cast of characters, but this is broadening of the market, which is good. If we look here under themes, you could see silver miners were the big winner at 5.82, followed by gold. But then blockchain, we don't care about marijuana. We have clean tech, copper, metals and mining, lithium, semis, uranium, solar. So a lot of the things that ran up in the from the post-April lows, even things like Palantir were up today. Hood had a great day. Um, I put into this category themes some of the things that I use in TradeStation to look at market rotation. One of the things that Praveen is going to make is to have this user customizable. So I'm not sure when that's going to come out, but that's one thing because there are probably some ETFs I'd like to add that aren't there today and probably have a couple that duplicate things that I might want to take out. What else on this? I think that's enough. If we want to look at what did poorly, you could see the only thing down was healthcare, cloud, cybersecurity, cybersecurity, China internet were some of the bigger ones down on the one day. Social media, internet, consumer discretionary, China discretionary, and software all were down, but the vast majority of groups were higher. If we go to the timing brief, good news. Weekly, nothing changed, but look at these bars. In fact, you don't have to draw them. You could see you had a flag and a flag and a flag, and you got breakouts from those flags. So that's a really nice thing to see on the weekly. And if we look at the daily, you start to see what I was emailing, which was if we close where we were at the time, and you can see we closed right under it, we are poised to break out of a descending trend line. That would be extremely bullish. On the other hand, a failure probably brings us down to at least this yellow line. If we look at the Qs, we closed above that line. If we look at the Russell, Russell's on fire. We've smashed the line. And if we look at the diamonds, I don't have enough candles up here to create that line. So really beautiful timing. We're green everywhere. So I've committed more money to the US markets. Friday's going to be a funny day. It's a short day. It'll have low volume. Those who are looking for an O'Neill follow through day, I think today may have been the first day you could see them. The likelihood the day before Thanksgiving or the day after Thanksgiving to have a 1% move on more volume than the prior day, pretty small. It's going to be light volume. If we look at the index charts in a little bit more depth, so one of the things that I've got Praveen checking is that I had put those trend lines in here earlier today and they didn't hold. So he's going to take a look at that. Make sure we're on the daily. We are. So we can start here with the spiders. And again, there's a lot of trend lines that could be written, but if I go through the highs, we are right there. We are at one of the best seasonality times of the year. You can see on the 5 year, a little bit muted on the 10 year, that we should go higher from here based upon seasonality. I don't like to see lowering volume, but I think that's just the fact that this is Thanksgiving week. What do I not like about this chart? I'm surprised that the weekly trend is still negative, but I guess we got to get above the prior highs to change that. We're probably very close. Except for volume, I think this chart looks great. Got to get above that line. But let's look at some of the others. If we look at the Qs, again, we can come up here, take the high here, draw it down here, smash through. Again, like the spider, seasonality is relatively good here. It flattens out a little bit into the end of the year where some of the others are stronger, but still positive seasonality. Again, decreasing volume. Not a concern, an expectation, but I'd be much happier if we were blowing through this with massive volume. Again, decent seasonality here on the diamonds. Um, I think we challenge the old-time highs. Again, the lack of volume, probably the calendar. The Russell, I mean, this is what we want them all to do. Blow right through the tops like that. The Russell is so close, 252.78 from all-time high-ish, and it closed at 245.06. It's 3% away from an all-time high. That would not be absurd to see that in a Christmas rally. So we'll see if we get there's anything I don't like. Yeah, I don't like the volume, but we've already said that 4 times, so I'm not saying it. VIX, opposite. The VIX actually traded down but closed off the bottom. So I was looking, this is VIX futures, the VXX might look different. I was looking at various trend lines that I might run. And so we'll see if it can break down and go through that. The VIX was living, resting down here, and it's still much higher than that level. So, there's still some risk being priced in, perhaps. But each day the VIX has come down. You could see boom, 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 boom. Wouldn't surprise me, especially with the short-term oversold. Maybe Friday's not as positive a day, but it's the day after Thanksgiving. The volume's low, and God knows what it's going to do. It's going to probably move a lot more than it should because of low volume, and then it'll come back to earth on Monday, whichever way it goes. The dollar, again, when you look at this view here, it kind of almost looks like I didn't do that, did I? Let's start this again. Delete that. It almost looks that the dollar is like kind of in a channel and um, channel trending higher. And I'm not a dollar bull here. I think a weak dollar helps my stocks. But the reality is we're way off the high. So we might be channeling higher. So we'll wait and see if it comes out of that channel or not. All right. So I don't see anything I don't like here if I'm bullish, except the VIX a little higher than it should be if we're really moving up like we are. Gold and silver both moved a little bit today. Gold was up a tad, 0.80. Silver, boy, it looks like it's going to threaten highs. It really does. So both of those look interesting here. Endeavor Steel was one that I didn't get filled on, unfortunately, today. I do have a position in LA, no, NUGT. I got LABU too, but Nugget looked all right. Oil, a little bit of a rally today, up 1.14%, but struggling below the 50 and the 200. Natural gas popped, so some of the natural gas stocks outperformed as well. Natural gas up 3%. And then let's just look at the 10-year. It's an interesting candle. If it was up here and did that, that's a shooting star, and the market's going to go lower. I don't know what to do the shooting star after it's dropped quite a bit. From a movement, hardly moved at all, down 0.05%. Certainly tried to go higher. Maybe that's telling me there's pressure for it to go up from here, but look at where it closed. Right about the magic 4%. That's pretty good number, especially if somebody was worried that they're going to raise rate or not cut rates. The 30-year, similar candle, finishing down 0.24. So rates are our friend, dollars our friend. No Fed head speaking until rate cut time. Um, Earnings season's behind. Great seasonality going into the holiday on a strong point. I think all the ingredients are there for a year-end rally. I haven't forgotten about the Hindenburgs, so it's not without possibility of being wrong, but I do think there's a lot here to like. On the buckets, remember I said things are a little bit less extended than they were yesterday. You could see the number of stocks in gray yesterday versus green above the Bollinger Bands on the NYSE, NASDAQ, Russell, and the S&P 1500 all came down a bit. Um, the market's moved up considerably, but not a lot of it is in an area of obvious need to revert to the mean. Market breadth, you could see big move up on the NYSE, a little bit more muted move on the NASDAQ, which kind of looks more like a doji or spinning top there. If we look what's underneath, we can see stocks above the moving averages really moved up a lot on the NYSE. You could see moved up, but not as much on the NASDAQ. You could see that new high, new lows, positive, a couple bars in a row. You can see AD lines positive, up down volume is positive. Now, some of the platforms I have had a Phoenix down here, um, which is a bearish exuberance. And when it comes in after a sell off, it's actually bullish. I'm having Praveen check the data and see why ours didn't fire. Um, we did make a change in the product about a month ago where I took the overall NYSE and uh, Praveen filtered it to make sure they're stocks and not bond funds or preferred stocks in it. And I think one of the challenges that anything that's based upon the NYSE has is the variability in what people put in their NYSE. Now, one thing to maybe be a little bit concerned about is 1, 2, 3. This will be the fourth time that we approach this level on the NYSE, and we have not gone through it yet. So that's something to keep aware of. I'll show you something else in a second that has me a little bit concerned on the very short term, and that's this green line. So those of people that have followed me for years know that I respected a tool that looked at the 13-week new high, new low, and that it really was great at calling short-term reversals in the market, long-term reversals as well, but you get the same signal both ways. And when it gets above 90.95 or below 0.05, it's the time to be concerned. And we're at 0.96 on the S&P 500. We're at 0.96 on the S&P 1500. Less concerning, the Nasdaq's only at 0.76 and the Russell's at 0.92. Maybe what we see is further movement into the broader Nasdaq and maybe some short-term consolidation in the S&P. It doesn't have to happen. Certainly the market could go higher from here and not care what I think, but typically this is a short-term, sorry, I got the hiccups, a short-term signal. Everything else here is exciting. The stocks above the various moving averages continue to move higher. The AD lines, maybe even certainly on the S&P 500, looks like it's moving up more so than price. I mean, I could draw a trend line here and a trend line here, and I'm not sure that we're not leading on the AD line. The AD lines look good. The RSI is reversed. I think it looks great. Maybe a little short-term overheated. And then if we look at a couple other things that I've been playing around with that you don't have right now, but it's simple simple, simple for you to do is if you create any chart and you go into this gear and drop it down, you should have a default market timing, and you can apply that layout to anything you want. So I built using the new layout tool, I built a 12 box layout, and I put the actual Bitcoin, and this is using, I think it's a grayscale Bitcoin. I didn't have the Bitcoin future symbol working. And then the 11 S&P 500 sectors. And then I look at buy sell signals, and you could see they work on stocks too. Just not sure they're fast enough, but it does give me an idea. You can see how strong healthcare is. But over the weekend, the only thing that was positive was healthcare, and I think we lost energy. And look right now, healthcare, staples, a new on industri on excuse me, utilities, real estate, materials, financials, here's industrials, communications, discretionary, all of them on the timing model are positive. It's a very different market than it was a week ago or 2 weeks ago, and that's more bullish. And then I'm also looking at some of the key stocks that we might follow and looking at Amazon, which I think it sold off late in the day a little bit, but that one to me looks poised to move, but it hasn't given a buy signal yet. But Apple, Google, Meta have been strong of late. Tesla gave a buy signal today. So I'm going to study this more and more and see if it's worth looking at the timing model. Um, I got a few glitches in this that I got to work through with Praveen, but I keep building and trying to expand what we can do with the tool, and more about that on Friday. If we go into JS layout, one thing I wanted to do is just look at creating something. Let's create a ratio chart, the RSP, and we want to do a ratio chart. So I'm going to click the divide. Now I'm going to type in spider. So this is going to give us a ratio chart of the equal weighted S&P versus the cap weighted S&P. And this is what I wanted to show you. Now this is a kind of thing I'd probably make it into a line chart. What, and I would forget everything else on the chart except to say that we've reversed. That as we were coming down, this is telling me that the equal weight is being controlled by the cap weighted. But now we're pointing up, and so all of a sudden you've had more of a RSY performance, and now perhaps they're kind of neutralizing. I can't find RSY. There we go. That is bizarre. Why is it giving me end resist? Well, let me change this into and then let's go back into the candles. I kept thinking that I forgot how to spell RSP. That's why I was looking for the wrong thing. All right. And you could see that similar perhaps to the spider, kind of looks the same way, doesn't it? Except we've broken out here. So to look at the strength here, let's look at the spider. I think we're going into a period of time where the equal weights are going to expansion of the market away from the cap weight or the large caps. So we do not have to correct because of that 13-week new high, new low, but it suggests further rotation and probably rotation to the broader market, which is what we've been seeing. So that's my look at some of the sectors and the markets and my thoughts. I also have ratio charts here where I can come in and look and see what's outperforming the spider. So anything that's moving up is outperforming the materials, communications, Energy is underperforming here. Staples has started to do better. Tech sold off. Industrial sold off. Look at healthcare. This has been the big leader. So now I'm back to the JAS layout. So this is where I have my indicator set up. And if you were to look at this in Metastock, as I showed you last night, it's the exact same chart, except Metastock's got it beat. Metastock's doing an operation right now, so I don't think I can open up and look at the chart. Yeah, it's still working. But in Metastock, I can plot the daily and the weekly relative strength versus the spider on the same chart, which is really cool. So, as a top-down trader, first assessment is on the market. I think we can agree the market looks okay. My second thing is to look at the um, leading stocks and the leading industries and the leading sectors. All right, so let's just look let's look at 2-day momentum today. And it's cyclicals, which would be discretionary, industrials, and basic materials are the top three by 2-day. Short-term movements, those are the top three. Let's rank the industry groups from that same three sectors. That's the only industry groups we have here, not all 170 or 80 of them. Let's take the top, make sure I rotate by FM2, which I did. Let's take those top 10. One, and we have 179 stocks. And then let's filter these by $5 and 500,000 share minimum. Now I'm down to 90. I could look at every one of these. So let's just rank. I'm not going to. Let's rank them by FM2. And let's just see what comes to the top. SMX, um, not interested. Abercrombie and Fitch, this one moved up on earnings. There's certainly with Walmart, Urban Outfitters, and others is a move towards um, apparel. Not great earnings, but a surprise on earnings and a small surprise on revenue. Um, Trades at a minuscule PE is why we saw this work. Here's Urban Outfitters, big move up on earnings. You could see 11.25 were earnings, so that would have been yesterday, and a surprise on earnings, although not revenue. Keep going down the list. This is Lennox. I think they're involved in home building. Kohl's, what a name for the memes. Except it looks like Kohl's is turning it around. So you're seeing a theme here of retail. Quanta Services, PWR, looks very interesting here. Earnings are out. They had an earnings surprise, a revenue surprise. They don't pay much of a dividend. Multiple 38. And they are, I guess, involved in data centers from the energy perspective. And if we just connect these highs, it's about to break out. So a move above that, I would find this to be the first stock of significant interest that I have. Costco had a big move. No surprise, it's probably the world's best retailer, but I always used to comment that I didn't understand the price. Well, the multiples come down in half as the price has dropped considerably, still in a downtrend. DY, DICOM, I think. Don't remember what they do. I just have to highlight that. Specialty contracting, management engineering service, plans and designs, aerial, underground, and buried fiber optic, copper, coax cable, and construction, maintenance, installation. Um, so it sounds like it's mostly a carrier thing, but I wonder if it doesn't have a role in data centers. And guess what? They're based where I used to live, or right now adjacent to where I live today. Lulu, a very oversold, popular clothing line, um, trades at a multiple of about 20. Um, Here's one that I did like, Dollar Tree. Couldn't remember if I like better Dollar Tree or Dollar General, but earnings came out in September. Nice, not nice, gigantic earnings surprise. leading to a bit of a rally here. Let's just turn off the earnings for a second. But this one's breaking out. It's got double blue dots above coming out of a squeeze. Relative strength looks good. Dollar General is the one I liked breaking out of this, and this is on my buy watch list for tomorrow. BLDR, Builders First, kind of low. And then last night I talked about the home builders looked like they were setting up, and I had a buy order on a home builder ETF, and I chased it a little bit, and then I said I'm done chasing. I hate those every time I put in a bid, they move the bid up. Um, happens all the time. That's Toll Brothers, Pulte Home, similar, Lennar. These are all way off their highs. And I think these things are moving in anticipation of a rate cut. I would be looking if I was at when earnings are coming out, and they're all going to come out at the same time. The earnings are a couple weeks away. So Lennar looks good, Pulte looks good, but probably the one I liked the best on this whole group was Power, PWR. So that is how I like to do top down. I made my world small. I dropped my 3,800 stock list down with three sectors, 10 industry groups from those top three sectors, filtered for price and volume, and got to a manageable number of stocks. That's how I do it, and that's where my best long-term winners come from. But sometimes it's not the sexiest thing because even I too want the shiny objects. So let's turn off the top-down approach. And with none of the sectors eliminated, you can see we got a lot more industry groups. So let's just go back to the impulse list. And there are a number of things that I could do. Let's kill my filters to find the best stocks, but I've made it easy. I've got two scans. I'm already working on the third that I want to add, but the A plus scan has been where my winners have come from. Let's just make sure that I'm not filtering some. So this is a scan, and these things update every 5 minutes during the day. And this is scanning looking for two momentum bars in a row. And why would it do that? Because I like to visually look back at stocks. And I found that sometimes the biggest run occurred when I had two blue dots in a row sitting above the squeeze. So what I want to do with that scan is I want to limit it on price and volume. I want to make sure that my weekly bongo, the weekly trend is blue or positive. I want the relative strength versus the SPY to be positive, and I want the volume versus the moving average to be positive. So our house was on, I believe, yesterday, or I think it was on the other scan yesterday, but you could see two blue bars in a row, taking out trend line resistance, relative strength moving versus the SPY above the moving average, as is OBV, not extended. So let's look at when the earnings come out. Earnings are out. They had an earnings surprise, 12% growth, 29% PE, but it pays a 5.34% dividend. I don't know what they do. Retailer. Well, isn't that interesting? We saw strength in retail on the top down. This has been a very good signal for me. Next one was BCS, not the college football bowl system. Barclays. CureVac is I believe, a takeout stock, so I don't care. We looked at Dollar General, and I like Dollar General, and this is why the two double lines dots here and relative strength and OBV look good. Dollar Tree I don't think looks as good, but it looks pretty good in itself. I'm not trying to, and I don't know enough. Catch me in one of those stores, so I don't know enough about the stores, but they're both breaking out of some resistance. MFG is a Japanese bank breaking out. We saw some strength in regional banks today. Wrapped did one of my favorite signals, which is it ran down into the 50, followed by a bounce. And I've had some of my best stocks there. It's got really strong seasonality. Biotech has so many things that drive it. I don't think this thing has earnings, has no earnings. You could read about it here just by highlight that. And then you can look up here and see if there's been any news. Someone came out and said looking like an opportunity. You do your own reading. I don't know enough to tell you about this company except to say uptrends, pull back to the 50 and a breakout are some of my favorite. TKO sounds like this is that wrestling or boxing company, is it? Yep, boxing company. Um, Broke out above the falling 50, not my favorite, but they're all going to have the two dots. And then Urban Outfitters, we saw before, it's probably already broken out. But look at this earnings growth, surprise, revenue growth, a PE about the same as its earnings rate. Um, Maybe there's something to like at Urban Outfitters. That's my A plus scan. My A scan are still good students, and these require an uptrend. Let's put one on. Let's just put Dollar Tree on. It requires the stock be in an uptrend by the weekly bongo. It's got a price and volume of 5 and 500,000 shares. It's going to have a requirement for either the yellow line, which is a squeeze, or the green dots, which is just coming out of the squeeze. Relative strength versus the spider has to be above the moving average, as is across of OBV. So this is Dollar Tree. That one we already looked at, but let's just go through this real quickly. Alcoa, breaking out there. This was a cheap gold stock that I thought looked interesting here. Um, I don't have any problem with that. If you want a low cost gold, one of the stocks I own is CVS. I bought this when United got bought by Warren Buffett. There was some things I liked about this one, and you can see squeeze, and then it also requires either a momentum or a breakout, among the other things. This one pulled back into the 50 and held. EXK is that Endeavor Steel that I put a buy in that did not get filled. Just looking at on this one, I was looking at that level there where we had failed at and we broke out above today. MTZ, big uptrend, pullback and breakout. Um, New Gold, another gold stock, taking out the prior highs. SA is another gold stock. So maybe there's something to say about these low cost gold stocks. SVM is a bank, excuse me, Silver Corp rather, not a bank. This is another materials play. TD is a bank, beautiful uptrend. Boy, that's tight. TGB is a mining, if I remember, company. So another gold and silver story. And Vale's got multiple mines, gold, silver, iron ore, and others. So clearly a lot of those are represented here. I'm going to summarize by saying this. I expect Friday to have some of its own challenges and because of low volume, but I do think we're going to probably go higher into the next week or so until we get closer to the Fed announcement. I am not all in because there is still risk here, but I'll continue to add to my long positions. Markets rotating, so my money's got to move to where the leadership is going. It doesn't have to be the Mag 7 forever. And so that's something to be not careful of or concerned about, to be aware of. So I wanted to look at some stocks that came out of one of my other tools. So some of you have the TradeStation set. And what TradeStation has that the none of the other two have is they have my stuff, Sager's stuff, and John Person's stuff. So I ran the cat combo, which runs against a lot of features, and then I can filter it. And these are the big leaders that came out. These would be pullbacks and uptrends with breakouts. And it combines the best of both products. So let's just take a look at this. Now, one thing TradeStation I think does a mediocre job of is I don't think it does a great job of sector industry group rotation. Wealth Charts does a much better job. The Market MRI Pro app does a better job. And I'm undecided yet on how Metastock does. I'm still working through that. I've got some ideas how to make it even better. But let's just look at, because we have time tonight, we got tomorrow off. Let's just look at what came out of my favorite scan and has been a go-to scan because of how I combine Sagers and my stuff. TER, Teradyne, a semiconductor stock. Let's take a look at this. So it's already running, had a clear flag and a breakout, great seasonality, momentum in a breakout, relative strength crossing up, OBV looks good, not extended. Um, this is not meet the criteria of the A because there's no squeeze. And it doesn't meet the criteria of the A plus because of no double dots. But it looks good to me. UPS, that's a weird name to see, but it's Christmas time. Um, I don't get it on UPS. I guess a breakout above the 200, but not interested. CGAU, I think that's one we just looked at. Bring this back here. Yep, that looked interesting. AEE and energy, data center potential support story. Um, Again, I'm not typically into utilities, but um, with the data center story, it's interesting. It'd have to break out above that. Um, so let's just see what kind of a dividend it pays. 3% dividend. It's actually got pretty good earnings per share growth and about half the multiple. All right. EE. I'm just looking at some for these for the first time. Don't like it as much. VIPS. This is an internet retailer, Chinese, I believe. Let's make sure. Let's look at when earnings are out. Um, Under here it says online platform, People's Republic of China. So all the caveats about People's Republic of China. However, I like making money, not being political, and that looks like a nice breakout there. Relative strength and OBV looks good. AA we already looked at. LNT is another utility. Getting close. AXL Auto Parts. I mean, technically, it's probably could had a breakout from this area, so that might be one to look at. It's coming out of a squeeze. It had a breakout there. Don't know why this one didn't make the A's. Huh. All right. BIP, definitely a infrastructure play with data centers. It broke out here. This is when I found it. Little pullback and now another fresh breakout. Knee we looked at and EQX. Break it out. So let me summarize. I think markets go higher into year end. That's my base case. However, I have to put an asterisk and say I got those Hindenburg omens that still have me concerned, and therefore I am not going to be all in, nor am I going to be ultra leveraged. I can still buy stocks here until the signals change. With both the weekly trend and the daily trend model for all the ETFs being positive, I'm not short. I don't have any contra ETFs here. I'll be looking to enter them if something changes and my take on the market is different. I think short term we should have a little rockiness on Friday because of that 13-week new high, new low. But I also know that we're in a wacky time of year and We may just see rotation, which is what we're seeing. I showed you how the RSP might be taking control over the spider right now. I looked at some groups. I didn't see a lot of tech. I see small gold and small silver players. I see home builders. That Teradyne looked very interesting as well. And then what about retail? And maybe it's Dollar General. So there's a lot of things out there that look interesting here. None of these we talked about 6 months ago, except for the things related to energy and data centers. Rotation, rotation, rotation. And maybe at Friday at 10 o'clock, you'll rotate your dial and I'll see you then. Have a happy, healthy, safe, and wonderful Thanksgiving. Sorry I went so long. I just like to talk sometimes. I missed you guys. It was hard having my wife say I can't do videos when we're in the same room in a hotel because she hates my voice. Well, she hates it when I do the videos at least. Bye now.